Welcome everyone to the Green Finance Institute and Pollination's Natural Capital Lunch and Learn, a series aimed at finance practitioners seeking to understand better how they can embed nature within their businesses. I'm Alistair Marsh, I'm a reporter with Bloomberg here in London, and I'm thrilled to be hosting the first in our three-part series over today, tomorrow and Thursday at the same time, 1 p.m. to 2 p.m. London time. Panelists will be discussing how they are looking at nature-based risk assessment, that's today's topic, how to invest in nature at scale, that's for tomorrow, and how the public sector can help mobilize private finance into nature-based solutions and projects. There'll be plenty of chance to ask the panelists your questions, so please think of some and send them in as we go along. And I recommend signing up for days 2 and 3 if you haven't done so already. So today we're tackling the topic, as I said, of nature-based risk, and I'm delighted to introduce you to our panelists. We have Robert Alexander Poujade. He is ESG analyst focused on biodiversity at BNP Paribas. We have Katie Leach. She is senior program officer for the UN Environment Programme World Conservation Monitoring Center. We have Yasmina El-Shaveh, who is executive director at Pollination, and Roel Noosman, who's senior advisor for biodiversity at ASN Bank and is also the chair of the Partnership for Biodiversity Accounting Financials. We're going to be discussing with each of them how they're viewing nature-related risk, what are the tools that they're using, and the broader challenges around measuring dependencies and impact. This is going to be very much a practitioner-focused in the nitty-gritty today. There'll be plenty of time for Q&A at the end, so I do encourage you to post your questions in the Q&A function if you can, and if you have a question for a particular panelist, please make sure you say who it's for. So let's get started. The Dasgupta review out earlier this year highlighted the importance of assessing nature-related risk. It's been an increasing topic of discussion amongst financial actors of all kinds over the last year or two, certainly in the last several months. And it got a big boost last week with the launch of the Task Force for Nature-Related Financial Disclosures, or the TNFD. And the TNFD will provide a much needed framework of pragmatic guidance to the finance sector and companies in general, assisting them in understanding how best to measure and disclose and ultimately hopefully reduce nature-related risk. And that framework will take time to be fully operational. It's not due to be, the framework itself is not due to be live until 2023, so 2 years from now. So we're going to be discussing today how the finance sector can start to address nature-based risks at this moment right now. So to mix things up from your regular Zoom panels that we've all become used to during COVID, I'm going to ask each panelist in turn to introduce themselves, to talk for a few minutes, no more than 5 minutes, about the work that they're doing in the space, some of the accomplishments that they've kind of achieved so far, some of the challenges that they face, and just so that you, the audience, can get a sense of who the panelists are, the work that they're doing, and so you can better direct your questions towards them as we go on. So I'm going to start with Robert from BNP Paribas. Robert, you've been doing a lot of work on trying to understand nature-related risk and have been involved, as a firm, BNP Paribas has been involved in the informal working group of the TNFD. So let me ask you then, with that experience, how is the bank looking at nature-based risk, nature-related risk, and can you share with us some of the tools you're using and some of the challenges, which I guess there might be many, but I'd love to hear from you, some of the challenges that you're facing. Over to you, Robert.
Thanks, Alistair. Hello, everybody. Very pleased to be here. So yes, I'm an ESG analyst. I work in the investment arm of BNP Paribas Group, so in BNP Paribas Asset Management. So I'll try to give the picture from the investment arm, not really the banking side, but of course, we work a lot together, and especially in the context of what you said for as co-chairs of the investor working group of the TNFD. So yeah, it's true that I mean the work we did in BNP Paribas Asset Management was basically to think about how we are related to all those nature-related risks. So it can be physical, transition, reputation, and not forget systemic risk, right? So in order to tackle this immense task of understanding our risks, I think we have been thinking about how to organize internally our understanding of the risks. So we used our framework, which is the Global Sustainability Strategy that we launched in 2019. And we have really put a lot of the thinking into this existing framework because we talk a lot about ESG integration, about stewardship, about our responsible business conduct, which are the do's and don'ts in the type of investment we want to make or not to make, the funds that we launch, our range of solutions. Of course, people, trust us with their money, and not to forget the CSR aspect. So all those pieces had to be combined together when it came to nature. And this is why we launched our biodiversity roadmap. I don't know if you've seen this 42-page document, but basically it sets the scene on how we want to address those risks, as I was mentioning. And I think, having in mind, planetary boundaries, of course, hugely important framework to understand, especially the systemic piece. When we think about the savanization of the Amazon, what does it mean for us if we have exposure to Brazil? When we speak about physical risk, of course, the pollination piece is very important, as it's very emblematic. And for that, we've been looking at tools such as Encore, for example. I'm sure Katie will speak about it, but to understand the dependency of our assets under management on ecosystem services, and pollination, of course, is a very important dependency for the food sector. So that's another tool that we have used, but we are using different tools to measure the impact of our investment on biodiversity. So I know we're going to talk more in deep about all those aspects, but yeah, as an introduction, it's true that we need a variety of tools to account for those risks, for those externalities which are not priced in. And this is why, initiatives such as TNFDs are super important for us to make nature more visible in everything we do, to also make better investment decisions for clients. So that's obviously our goal.
Fantastic. Thanks, Robert. Okay, well, that's a perfect segue for me to bring in Katie, since Robert's already mentioned the Encore tool. Katie, you lead UNEP MC's work with the Natural Capital Finance Alliance to develop and manage the Encore tool. Could you give us an overview of what it is? I know that there's a lot of interest in this tool. How's it being used, and how might it develop in the future?
Sure, thanks so much, Alistair, for the introduction. So maybe just as a very quick intro to myself. So my name is Katie Leach. I'm a Senior Programme Officer in the Business and Biodiversity Programme at UNEP WCMC. Been there for about 5.5 years, and UNEP WCMC is a UK-based charity. We're located in Cambridge, but we collaborate really closely with UNEP. And our sort of main aim of our programme is to work in partnership with business, financial institutions and governments to equip them with the knowledge and solutions that they need to succeed while protecting and restoring nature across the world. And my work within the programme focuses on corporate biodiversity measurement and the development of the Encore tool. So just to spend a bit more time talking about Encore. So Encore is developed by the Natural Capital Finance Alliance. This is a group of partners from UNEP WCMC, UNEP FI and Global Canopy. And we came together what feels like many years ago now to develop the Encore tool. It was launched at the end of 2018. And you may have seen that there's been lots of different developments in the coming months around it. So at its core, Encore is a database that was put together to understand different economic sectors' impacts and dependencies on nature. So for dependencies, we look through a whole range of ecosystem services to see how sectors depend on them, and then also look at the impact side as well. Encore has a spatial component where we have spatial data sets which are compiled in a map, allowing you to look in more detail at different risks that might arise from changes in the provision of those ecosystem services. And that's, I suppose, the heart of it. It's already being used. It's great to see so many applications of the tool already, for example, by the Dutch Central Bank. And we know that Robert's been using it in his work as well. And we're seeing increasing uptake of the tool, which is really great to see. In terms of what we've launched recently, we've just included some maps which show the global hotspots of natural capital depletion within the tool. So I'd encourage people to have a look at those if you haven't already. And just a couple of weeks ago, we launched a new biodiversity module as part of the Encore tool to guide financial institutions in exploring exposure to biodiversity related risk, but also to the focus here being to align financial portfolios with global biodiversity goals, for example, those set out by the Convention on Biological Diversity, which are in progress. In terms of the future, we have a huge range of plans, and happy to go into more details on these if anybody has any questions on them, but we would really like to add in the indirect impacts and dependencies. So those, at the moment, Encore focuses on direct operations, and we recognize, for example, like sectors like food and beverage, we need to include upstream and downstream impacts and dependencies within the tool to aid decision making. We also want to make sure that there's a link between the spatial data and the dependencies information to ensure that we can move towards quantification, which seems to be the next logical step in this process. So yeah, just a few pieces to introduce it there. Happy to go into more detail later.
Thank you. I think we probably will go into more detail later. Okay, well, continuing on the theme of tools and measurement, maybe I could ask Yasmina from Pollination to come in here. Pollination has developed a tool for measuring nature-related risk. I guess I'm interested to ask you, Yasmina, what makes this tool different from others? I know today we're going to be talking a lot about the tools that are available in the market, but what makes what you're doing different, and why did you go to the effort of designing your own? Like, what was the purpose of that? Could you talk about that, please?
Sure. Thanks, Alistair, for the introduction. And just very quickly, so just a very quick intro on myself and on Pollination. I am an executive director at Pollination based in London. My personal background is in the finance arena, where I spent some 15 years in investment banking, working predominantly in infrastructure and energy, and much more recently on new emerging asset classes like natural capital and adaptation finance. And for those of you who are not familiar with Pollination, we are a specialist climate change advisory and investment firm, focusing on designing strategies and investments that enable the transition to a net zero climate resilient economy. We work with companies, with investors, governments to design innovative investment structures and put together transition roadmaps. And as part of that, we have a very strong focus on natural capital because it's clearly an integral component in that pathway to net zero. So we're actually doing a great deal of work in the space from an advisory, an investment and a policy perspective, as well as through our foundation. I'm going to let my colleague Martin Berg, who's on the panel tomorrow, talk more to the investment arm of what Pollination does, but just focusing quickly on the advisory arm. So we've been involved in great detail in the working group for the Task Force for Nature-Related Financial Disclosures. We're also involved in a number of other policy discussions. And we are currently advising some emerging market sovereigns in Africa and Asia on the valuation of their natural capital portfolio, as well as helping them to design structured products like natural capital bonds, debt for nature swaps, blended finance solutions designed to monetize and protect their natural capital resources. So to that end, obviously, we are developing and have been developing and testing this a new sort of natural capital impact assessment evaluation tool, which we're obviously going to be talking about today. So just in setting the scene and answering your questions to the rationale, to date, I think it's probably fair to say a lot of the conversation around natural capital as an asset class has been through the lens of concessionary impact investment. So basically a belief that there necessarily needs to be a trade-off potentially between value and impact or conservation actions. So we believe, in fact, the opposite is true, that there is a standalone value to be achieved through nature positive investments and outcomes. So in designing the new tool, what we really wanted to address was some of the challenges and barriers to unlocking capital for nature and shifting or reframing that mindset from seeing nature as just a cost that was needed to mitigate risk to a potential future value opportunity. So we started working on this tool some time ago for a couple of key reasons. One of which was we found at the time that many of the tools in existence operated at different scales, had been produced for specific applications or geographies, were targeted at specific user groups or measured slightly different things, which resulted in a very fragmented landscape of tools and made it quite challenging to compare investment propositions across asset classes, geographies, scales, and so on. So we felt that there was a need for a more standardized approach. And I think further, we also felt that there was a need for a tool that could bridge the gap between the scientific analysis that necessarily underpins impact assessments and the financial language that investors and businesses speak. Right. So we really wanted to design something that went beyond the measurement and quantification of just the downside risk posed to investor portfolios or businesses, looking upstream at their value chains, into a valuation framework that investors could rely on to make risk return decisions. So really, I think that's the crux of why we created this tool. And our approach was very much to take some of the best in class scientific metrics and tools that exist today to the extent possible, and then quantify the natural capital risk and impact, and then take the additional step of translating the impact assessment into a meaningful financial framework and a mix of risk and opportunity within like a more traditional capital asset price, market model.
How do you speak nature to a banker? Yeah, that makes sense. Good. Well, I guess we'll get into talking about that later in more detail. Thank you very much, Yasmina, for that. Last but not least, I'm keen to get to Roel. ASN Bank, and I hope we have time to talk about this because this is really fascinating. Back in 2014 was the first bank to, I believe this is correct, or certainly at the very beginning anyway, it's the first bank to set a goal to become overall net positive on biodiversity and set that goal for 2030. So I'd be very interested to chat with you, hopefully later on in the conversation, about how that's going and some of the learnings. But let me ask you just this first question, as in your role as the chair of PBAF, the Partnership for Biodiversity Accounting Financials, which is looking at the measuring of impact. Could you share with us a little bit about that work at PBAF and the challenges of measuring impact when it comes to kind of nature-related risk that we're talking about today?
Yeah, sure. Thanks, Alistair. For us, it really started in 2014. I work at ASN Bank. It's the fourth largest retail bank in the Netherlands. We also have exposure with investment funds and therefore exposure to biodiversity risk and also biodiversity in general. We started in 2014. We were quite active in the field of carbon. We started a PACOF, the Carbon Initiative, and we're really quite busy. A lot of resources were needed at that time. So the last thing, we wanted to set up a second platform, a partnership focused on biodiversity. But when we started, there were many questions coming around the corner, and it got more and more difficult because the topic of biodiversity in general is a lot more complicated than even climate, and especially how the activities of a financial institution connect to nature is even more complicated. So in 2014, we had too many questions and organized a stakeholder meeting, got a lot of input, and the conclusion was, if we want to take a next step next to sustainability policies that we have, but really take a next step and set an audacious goal, which it really was in 2014. You really have to start also measuring, and because at that time there was no methodology out there, we started. We decided that we needed a methodology ourselves. We need to develop one together with two consultants, Spray and Krem. And since then, really been reporting on our biodiversity impacts and automating a lot of steps, making it more practical for financial institutions to do this work, which is really necessary to make it practical. And understandable, of course. And of course, by being a pioneer in this field, by doing this work, still a lot of questions came around the corner for us, and we really thought that we couldn't answer a lot of these questions ourselves, like a net positive impact. Is that even possible? And if you want to do that, in which way should you do that? So that's the reason why we started PABAF, officially under the name PABAF in 2019, starting only with a small number of Dutch financial institutions, and since then grew the initiative to now 25 institutions, and hopefully answering a lot more questions on how to report and disclose your impact as a financial institution in a practical way, quite descriptive, which is necessary because the knowledge generally at financial institutions of this topic is not really high, so you need to make it practical and workable. And that's, I think, in short, my introduction. Thanks.
Thank you. Great. Okay. Well, let's thank you all for your introductions. We're going to move now to a more, I guess, conventional panel discussion. Let me just remind you, audience, that it would be fantastic if you have questions that you pose them. This is very much the idea being a lunch and learn. Hopefully you'll learn something from what's said, but maybe there are specific questions you have, so please don't be shy in putting them forward. Great. Okay, so my first question to the panel, and let's have an open discussion and see who wants to take it and chip in as you will, is one of the things that we talked about that most of you just referred to at least a little bit in your introductory comments was the TNFD. That seems to be in some ways like a seminal moment, a big moment at least for financial institutions recognizing or paying heed to nature-based risk, let's put it that way. Given that we have a few years to go until that's an operational sort of functional framework, how would you recommend organizations start measuring their risks in relation to nature today? Who would like to take that first? Robert, maybe you could kick us off.
Okay, no pressure. Thanks. No, but I mean, I think it's true that, there are different frameworks which are already existing, and TNFD will, also propose something which I think is going to be fantastic to mainstream nature and how to disclose on risk and opportunities on or linked to nature. But there might be like really quick wins for companies which are interested. I think IPBES, the equivalent of IPCC for biodiversity and nature, is using, like this approach of like 5 big drivers of biodiversity loss. And I think if you are an organization, you can apply this to yourself and say, okay, maybe I have maybe I contribute to biodiversity loss through my land use, exposure, through climate change, of course, through different pollutions. So, having, for example, just this type of thinking when you want to disclose and when you want to assess your dependency, your risk or your impact is, I think, something very easy to do, right? Also having the planetary boundary framework in context also can be helpful to complement that approach. And this is just 2 tips, let's say, but then obviously you have a lot of organization like doing this like full job, the GRIs, the impact measurement, project, all this kind of, frameworks or reported entities can help organizations do that.
Katie, you want to follow on?
Yeah, happy to follow on. I was going to say that, so UNEP WCMC, through our Deputy Director, we've been contributing to the technical expert group. So I'd encourage everyone to have a look at the proposed scope that's been put out by the TNFD. I think it's a really fantastic first start and actually helps to shape many ways in which you can already start to take action. It's just a proposed scope, but it's a really good starting point, I think. And I think my main point, obviously, yes, the TNFD is going to be a process which happens over the next 2 years, but there's going to be a huge opportunity to engage throughout that process. So I'd encourage people to get involved in that and start looking at the thinking that's evolving through the process. But I think there's a huge amount that financial institutions and companies can already start with. There's a huge range of measurement approaches and tools that you can use out there to already start building this understanding of where your exposure and opportunities lie. But also starting with internal awareness raising, I think, is going to be super important throughout this process. And yeah, a great opportunity the TNFD has presented for all of us, and a really fantastic resource, I think, to pull from, but also to be engaged in throughout the next few years.
Yasmina, you were also nodding at one point, maybe just enthusiastically endorsing what your panelists were saying, but did you also have something to add on?
Yeah, no, I completely agree with both Robert and Katie, and I think it's probably well covered. I think it is a very exciting time, and I think in a very similar way to TCFD, I think TNFD will introduce that additional rigor and standardization and, just convergence amongst the industry. So I think it is an interesting time, but as Katie said, there's plenty that can be done, between now and when the final sort of TNFD structure is released.
Okay. is it a fair assumption or not to think that the pathway that the TCFD took from, you know, a big public launch, and then within a few years it's become mandated, certainly in the UK, and there's talk about elsewhere. Is it, do you expect a similar path to follow with the TNFD, or is the kind of the added, or the multiplicity of complexity around biodiversity and natural capital, does that kind of in some ways complicate that pathway? Anyone want to chip in on that?
If I may, I can maybe just quickly say that, because here we talk about regulation and the regulatory environment, which I think TCFD can support regulators to step in. That can be this way, but it can be also the other way around. Like in France, there was like one article which was specifically requiring asset owners and asset managers to disclose their ESG and climate-related risks. So that was before TCFD, and I think there's a similar pathway in the French. I'm a French organization, so I use it obviously the context. But you know, there is the Article 29 of the energy law in France, who is now requiring asset managers and asset owners to disclose their biodiversity risks. That's going to be, and you know, it starts next year, and it will ask us to say how we align ourselves with COP15 goals, which are not even there yet, but you know. So it's going to also help, let's say, the regulators think about how they can use TNFD in the context of lawmaking and future regulation. So it's fantastic to see regulators stepping in before or after. I mean, the whole point is that we need more of those, let's say, mandatory elements to, you know, to support the transition.
Okay. I mean, it seems like when we talk about natural capital, it's very easy to draw a comparison, or at least try to you know, be cognizant of what's happened on the climate front. Certainly that's often what I'm thinking about. But when I think about the climate, we have the Paris Agreement, which has, you know, a clearly stated goal of, you know, less than 2 degrees. We have you know, an easy kind of easier measurement, sort of a metric that we follow, parts per million of CO2 in the atmosphere. But what do we have for biodiversity? And I guess that comes, you know, that sort of speaks to the complexity. But Roel, perhaps I could bring you in here. You've been conspicuously quiet, but of course you mentioned at the beginning how this is something that you've been looking at for several years now. Do you think that there could be a key metric that the market should kind of coalesce around? Is that practical? Is that helpful? Should there be several? Like, how does this process work from here? I'd be fascinated in your thoughts.
Yeah, also relating to the question before about the TNFD, of course, there are many things that financial institutions can do right now already, starting with strong policies, sustainability policies, but also using common sense, using the Encore database. You know, you can find which sectors, which locations have a high impact or high dependency on nature, and it's a logical step that that probably there is also a little bit more risk, or a lot more risk in those fields. So you can do a lot of things already. There's a lot of background data already available. All the tool developers are using them. That steers you really into the right direction. So it's not necessary to wait for the TNFD. And it's really good, like Katie mentioned, to start also internally of getting the process started, of the understanding of what it means for a financial institution, how they depend, how they impact nature, and steer those large organizations towards the IPBES calls it transformative change. It is a bit like that, because a lot of things need to be done differently if we want to finance ourselves to a positive impact. Or so I think I'm not sure if I answered your question properly, but
it was more amusing than a direct question. But yeah. Katie, you've been nodding along, perhaps again in enthusiastic agreement, or maybe you also have some thoughts on this.
I was just to make a comment about I think most people are probably aware, but there is a developing post-2020 global biodiversity framework that's been put forward by the Convention on Biological Diversity, and I think it's obviously a framework that's been postponed in its development, but discussions continue. And from a recent set of meetings by parties to the CBD around the world, there's a huge amount of comments and discussion happening around this framework, which we do hope will be launched either later this year or possibly into next year. But this is a framework that sets out the goals we need to achieve as a society and for the economy to work towards. I think it's a really great overview and framework to align towards, and throughout that there's specific goals and targets and things that we can look for, and will be as well metrics to look at in response to those goals and targets. Obviously, it is aimed at national governments though, and so there is the need for translation of this to companies, and that's what many organizations through, for example, the TNFD and the Science Based Targets Network, are already looking to translate that and see what it means for companies and financial institutions. But there's already some great things in there around measuring ecological integrity, measuring species extinction risk, and there's already metrics available to do some of that. So again, just an encouragement to get on, and we can start doing things now.
Fantastic. Okay, well, thank you for sort of answering that very kind of high level question. But if we can now kind of get a bit more into the nitty gritty of it, we're getting in some questions from the audience, and I'm going to go to some of those in a minute. But one question is, could each of you, and this could be very quick and very simple, say clearly, and maybe if it's an acronym, say what the acronym stands for, tell which tools you're using, recommend or endorse, or in some way involved with. Just that would be helpful to the audience. So Robert, you started the conversation. Could you you mentioned Encore already, but if there's anything else to add.
How long do you have, Alistair? No, I'm kidding. So CDP, we launched a partnership with CDP to boost companies' disclosure. So, not only CDP climate, forest, water, but also now there's going to be a new CDP biodiversity. Okay. But then there's Encore, there's, PBAF is not a tool, but, it's a stakeholder group. So we are part of PBAF, and we need to understand the positive impact side. So I would, count a lot of PBAF on SBTN. I mean, I can continue for long, but you don't want a long answer, I think.
Yasmina, what's the name of Pollination's tool? And are there any other ones that you're aware of?
The impact assessment and measurement tool is called ICON, and then the coupled part with evaluation is called NCAM. But I just want to say on that, we are actually, as I was saying, we are drawing from other metrics that are out in the market already, because we're designing quite a holistic model. So we're trying to draw, like let's say the IUCN IBAT red list and the IBAT and the EPI, and so we are drawing on other tools out there.
Acronyms are banned. You have to say what they stand for.
So the red list is for endangered species, and then we have a number of others. I mean, I don't think we probably need to go through all of them, but yeah, I think Katie probably covered the fact that there are a number of tools out in the market that can be used now. So we're obviously using our own, but we are using some of the ones available to feed into some of the metrics.
Fantastic. Okay. Well, I hope that between the two of you, we've covered most of it and answered that question. I'm kind of keen to move on to another question, and that is, given this great proliferation of tools and measurement systems that you've just so beautifully described, and the sort of the alphabet soup of biodiversity, you could call it, I could call it that. Should there be, do you think, would it be useful is it practical for there to be some kind of consolidation of these tools? Would that be helpful to the market? Roel, maybe I could ask you to kick off with that.
Yeah, I think that's a really good question and key. Of course, the alignment between all these initiatives and what there's now, it's probably not the last, because a lot of new tools will be developed in future. So it's really important that those connect as much as possible or cooperate as much as possible to avoid duplication of efforts, to avoid confusion around financial institutions that don't know at all where to start anymore. For us in 2014, it was already complex. The topic is complex, but with so many initiatives, it's really a maze, and we don't want financial institutions that just start on this journey to stop and be I don't know the right word for it. Yeah. So,
Katie, would you weigh in on this topic since you've been developing the Encore tool?
Yeah, and maybe I can weigh in from a aligning biodiversity measures for business perspective. So this has now sort of transitioned into something called the Align project, and it speaks to that question because, you know, there's been this huge proliferation in particular of metrics for biodiversity, especially aimed at corporates and financial institutions. And it's quite confusing for people to know what to use for what purpose, and alongside roles work as well within PBAF, we feel the need to improve the clarity and build consensus about how businesses and financial institutions can measure and report on biodiversity performance. So the Align project is just, well, I say it's just kicked off. It's been going for 6 months now. It's a 3-year project which is looking to provide recommendations for a standard on biodiversity measurement and valuation to the European Commission. And we hope that this can be integrated as part of the CSRD, the Corporate Sustainability Reporting Directive. And what we're developing through the Align project is just at the moment is an outline for what this standard could be. And for example, if you're looking at a particular application like tracking progress towards a net gain, a nature positive commitment, for example, it might lay out what considerations you need to think about in measuring biodiversity as part of that. So what do you need to think about in terms of your baseline, in terms of the scope of what you're looking at? And so that's the sort of things that we're hoping to do from it. And it will be quite a general approach. And we've already been speaking to the role and PBAF quite a bit to see how we can be complementary. So Align will be a general approach that can be used by all businesses and financial institutions. PBAF is going to pull out the specifics for finance in a lot more detail, but we are working closely together to make sure we're linked up in the technical considerations behind both of those. So yeah, watch the space.
Thank you. Okay, we're getting.
Alistair, so can I just jump in? Yeah,
yes,
I just forgot because I said how long do you have for like the tools, but you know, just talking about like data homogenization and how many providers there are now on biodiversity. I mean, we are seeing a lot of those providers coming up with ad hoc solutions, and Katie knows that because she was also in the scientific committee of our RFP when we launched a call for providers last year with AXA IM, Mirova, and Sycomore, and we had 14 answers from different consortium. When we said we want biodiversity metrics, we had 14 answers, and after 9 months we selected one. So it's the corporate biodiversity footprint, by the way. But it's just to say to everybody that there's a movement from different people, and I think it's good to have different data sets which are measuring different elements of biodiversity. It can be extinction risk, it can be abundance, it can be other underlying metrics. But I think the finality is that it's coming. People cannot complain that there's no data. That's now it's not. We cannot hear that anymore, right? So there's CDC Biodiversity doing a lot. Also, they are partnering with another data provider. So we see a lot of movements there. So for investors and financial institutions, that with the right guidance, as Katie was mentioning, like the Align and Measure work and Align are really helping to guide and say, hey, you are looking for this. This is the type of data you can look for. It's everything is in investors' hands.
Brilliant. Okay, thank you. Well, we have a lot of questions that have come in from the audience, so I'm keen that I post as many as I can to you. And there's been a couple that have sort of touched on the idea of the application of nature-based risk in emerging markets. A question about the development of tools for measuring and reporting actions against climate change, biodiversity in places like South America. Is that something that any of you have thought about, and kind of the discrepancies of data and data quality across jurisdictions?
I'm happy to start, but I'll let others come in. I was just going to say that we have some ongoing work actually within Peru and Colombia and South Africa for the on-court work. So as part of the initial phase of work, we really wanted to make sure that the tool can be used by everyone. So we have a Spanish version of the tool as well that can be accessed. But most interesting to this is that we piloted the on-court database with banks in Peru, Colombia, and South Africa, and we have those case studies kind of compiled and shows how you can use it. And everyone is at a different starting point, and some looking at portfolio level, some looking at project level decisions on nature-related risks. But there's some really great information that came out of that, and a guide on the Natural Capital Finance Alliance website on that.
I might also just quickly jump in here, Alistair, if that's okay.
Yes, please.
So yeah, we're actually also doing quite a bit of work, live case studies at the moment in Africa, both East and West Africa, as well as in Asia. And echo a lot of what Katie was saying in terms of the availability of data. Obviously, there are inconsistencies across geographies. And as we have technological advancements and improvements, we will see that standardization of data collation techniques through remote sensing and artificial intelligence. And we are actually discussing partnerships in that arena at the moment. I think another important point to make is just in terms of the standardization of metrics as well across geographies. I mean, obviously, biodiversity is one facet, but nature in general is very complex and dynamic and multifaceted. So it is always going to be debatable to try and get one standardized metric that covers, the quality of biodiversity, and another standardized metric that might cover the, availability or connectivity of water or something of that nature. But I think it's always important to remember that we do need to adopt a somewhat pragmatic approach, and it is about striking a balance between the level of resolution at the asset level and the geography and the local sort of context on the one hand, with the degree of standardization and comparability on the other hand, so that we can achieve that kind of global reporting standards that we're sort of aiming to achieve in this space.
Right. Let me, if we continue on the sort of the geographic theme, there's an interesting question here about if there's any efforts to engage with US financial institutions, because it seems to me that most of the banks or fund managers that have expressed an interest in natural capital and biodiversity work there's a distinct European flavor, let's put it that way. And I wonder if you're aware of anything to kind of engage the US. I mean, Roel, maybe I could ask you, because there's the PCAF, which of course is in some ways the predecessor for PBAF, started as a Dutch thing, and I believe more kind of European members got involved. And then at some point, some of the big American banks became a part of it. Do you expect sort of a similar thing here, or is there any sign of interest from the US at this point?
I think it definitely will evolve in time, and there will be more interest also from US banks. I think in Europe, the topic is, we are a little bit further with the topic in general, but I'm sure that US banks will be interested to join. Of course, we have a strong relation with PCAF, and in general, there's a strong relation between the climate work and biodiversity work. If you only focus on climate mitigation, climate actions, and don't look at the impact on biodiversity, you could really steer in the wrong direction. So I think, yeah, we need to make a strong connection with PCAF also, use that network, and I think in time it will come, yeah, and maybe quite quickly. I can't really predict, but
okay.
Alistair, can I just add on this?
Yes, of course, please.
Yeah, because we've seen interest from investors. So with a little s, not a huge S, but some investors in the US are interested. One has joined the steering committee of the Corporate Biodiversity Footprint. So the tool that we have launched with XIM, so they have joined our steering committee. So that's a good sign. It's that we're not just, French, Dutch, UK based, and we do our little things in our little corner. So it's a huge positive. And also from the banking side, I think there has been interest. Biodiversity has been an interesting theme, also from some sell-side research, some brokers that are writing papers on nature loss, etc. And it's also, a way to say that to the whole U.S. sector, which is very, heavyweight, right, in the financial sector, that there is a risk and there is actions to be done, and it's a call to action. So a lot. I think it's a positive trend we're seeing in the U.S.
Okay. There's a very interesting question here about the distinction between biodiversity and nature, and if there's any confusion, it's probably because I've sort of mashed them together in the comments that I've made. But there's an interesting question about how, amongst most of the tools that we've discussed, biodiversity sits at the center. So the question goes, how about other natural resources like water and land use and so on, and how are they distinguished in the tools that you're working on? Most of you are nodding. Who would like to sort of take that?
Could I might just jump in very quickly, and then please feel free to cut in. But I just wanted to say, I mean, with the tool that we're developing, that's that comment is spot on. It isn't just about biodiversity. So we are looking at the full realm of metrics. So we're looking at biodiversity, we're looking at water, we're looking at the landscape in terms of soil and vegetation, we're looking at the carbon sequestration potential of the asset, and we're also looking at social co-benefits, with the ultimate idea being that they obviously all feed into the value of that asset. It's not just about biodiversity at all.
Well, before you go, Yasmina, there's a specific question for you earlier about, is the ICON tool, is it generally available or is it proprietary? And if it's generally available, could you share a link or tell people where they can access it?
Unfortunately, at this point in time, it is not generally available, but watch this space. We'll see what happens in future.
Thank you. Katie.
No, I was gonna say I'm not gonna be able to remember all of the definitions off the top of my head, but I'll do my best. And to be honest, I think there is a lot of confusion there around the terms biodiversity, nature, and natural capital. They do all have specific definitions, but I think a broad term like nature is really useful to be thinking about all of the things that we're covering here today. So it is defined in the IPBES Global Assessment what nature is. So you can refer to that. I won't try and remember it now. But I really like the framing that's put forward in the science-based targets for nature initial guidance, which is advising people to look at the state of nature. So looking at species, ecosystems, and nature's contributions to people or ecosystem services. And also looking at the pressures on nature. So what Robert was saying around these 5 drivers that's put forward in the IPBES Global Assessment. I think that's a really nice framework, and that covers things like land use change and invasive species and climate change, and kind of brings everything together quite nicely.
Great.
Yeah, and maybe if I can on the data providers, for example, the one we are working with, but other like CDC Biodiversity, they are using this IPBES thinking to understand, to even disaggregate the impact. Like if you say you are investing in one company, they can provide you with the number of they have driven biodiversity loss for that number, but they can disaggregate by type of driver, like land use change, pollutions, climate change. And this is also interesting for us to then engage the ones who are particularly doing something on land use. We can prioritize. Same with ecotoxicity. So it's really helpful for us to understand the contribution of those companies to that given pressure, for example. And also the other comment I wanted to make is that there's been a lot of reports mentioning, how good and not good those tools are. So the pros and cons, because there are always limitations. So it's good to pilot all the tools to understand which one can be applicable for this particular area or not. And for example, the corporate biodiversity footprint is not really good in order to capture marine biodiversity. It's more terrestrial biodiversity. You don't capture biodiversity in the soil or beneath the soil. So these are limitations. There is no invasive species assessment in the tool yet. So it's a reminder for everybody that it's still a complex issue, and that the data issue is not solved yet, but we should be aware of those challenges to move forward.
Okay. Yeah, I agree with this. And when you are transparent about these things that lack in methodologies, you can always take choices and set up special policies for invasive species, which is really difficult to tackle in a lot of tools. Yeah, and in general, I really like the graph of PBL about sustainable development goals. Really, at the bottom, you have this natural resource base, and if we think these SDGs are important, of course we do, we have to keep that biodiversity intact. So back to you.
Okay. This may be a final question. Let's see how we go. But it's essentially suggesting that the direction of travel is kind of clear here with the launch of the TNFD and all the stuff that you're working on, all that we've been talking about. There's sort of a momentum, a march towards natural capital, whatever we're going to call it, investments. And there's a good question here about how would you propose that you identify, utilize, and measure who is the most efficient biodiversity implementation partners, i.e. so as not to kind of throw good money after bad, as the expression goes, but to, if you're going to be, allocating money into the natural capital universe, how do you identify what's good and bad, and how do the tools that you work on and develop, how do they help in that endeavor? Roel, you want to speak?
Yeah, it's a difficult question. It depends on which question you want to answer, of course, as a financial institution. If you want to focus on risk, or if you want to create a positive impact, etc. So it's a general, it's quite a difficult question.
Well, at ASN, your goal was to have a positive impact, right?
Yeah. So we have to measure our impact, both negative and positive. Answer questions in general. What is a positive impact? And the complexness increases. But yeah.
Okay. Robert, how about you as a sort of asset manager on the panel?
Yeah, if I may say, I liked what Roel said about common sense, because it's true it's difficult to measure positive impact. At all. We need the methodology, and investors cannot claim you will have a nature positive impact, if they don't show like number of species restored or things like that, which is very difficult to do. For example, in the listed equity space, maybe easier to do in the private equity type of investment. So there's lots of work to be done to identify and select companies which could provide solutions to restore and protect ecosystems, which is a task we have been doing with our portfolio manager that has just launched a fund called Ecosystem Restoration. So it's a difficult task, very lengthy, which requires lots of expertise to understand, based on what the company is promising in terms of water savings, land sparing, all that. You need to understand that and try to say, okay, is it a good investment? Because you cannot really match the claim in terms of, numbers, like you're gonna recreate this. It's not like marine protected areas, or which is easier, let's say, to where it's easier to see the regeneration so it's a complex task to answer the question, but it doesn't mean it cannot be done. And we see lots of new companies coming to the market, doing some IPOs, which could be tomorrow's leaders in the indices, and that would be great, because it would mean like nature will have, the transition would have been done, let's say.
Fantastic. Okay, well, we've got just a few minutes left. Perhaps I can ask one last question. Thank you so much to the audience for all your great questions. And the question I wanted to leave us with, and really we've only got 30 seconds each, I guess, if we're all going to answer it, is what does best practice look like? So we're talking about sort of nature-based risk assessment. That's essentially the discussion topic for today. You've all spoken eloquently about the things that you're working on and some of the challenges that we're facing. What does best practice look like today at this point, at the juncture that we're at? Katie, maybe you could kick us off if you don't mind.
Well, big question. I would say, so I really would go back to my comment earlier about referring to the proposed scope within the TNFD. I think it's a fantastic document, and within that, it's sort of saying, you know, what's basic, what's intermediate, and what's a comprehensive way of looking at nature-related risks. So all impacts, all dependencies, all financial risks and opportunities, and considering systemic risk, I think is important.
Fantastic. Yasmina, would you have any comments for closing out?
To be honest, I think Katie's probably covered it, but I do want to just add something to the previous conversation, which is just, I do think it is obviously, in order to protect this asset class and to achieve what we're trying to achieve with TNFD, it is imperative that we do not just quantify our natural capital footprint for businesses and investors, but also translate it into financial terms so that we do manage to crowd in private capital, because as long as we're sort of still talking around just the reporting, we're not sort of making that additional step that we need to take to, you know, to really get it into the mainstream and get investors capital behind it.
Right. Robert, that's a good point to bring you in. Have some comments on best practice.
Yeah, it's a very hard one. I think it will sound very consensual, but best practice, I think, is collaboration. Because again, I mean, I can boast and say, hey, you know, my biodiversity roadmap, it's like 42 pages, it's great, you should look at this. I think it's collaboration, which is, you know, pushing us to do more and to understand what Katie is saying, what Ipes is saying, what Roel is saying. It's really additive, and yeah, it's really a collaborative best practice. If you see what I mean, there is no like people that can single out as, you know, this is what you should look like. Obviously, the tag document is something which is valid for everybody. So I completely agree with Katie.
Fantastic. And Roel, perhaps I could ask you sort of a final comment.
Yeah, maybe to complement, of course, yeah, open source, showing what you're exactly doing, making it practical, using best available science and data, connect with the best financial modeling and knowledge, looking at the future, of course, not only looking at today, and of course taking all the scopes into account. That's what I can come up with.
Fantastic. Great. Well, thank you to the four of you. Yasmina, Roel, Robert, and Katie, thank you so much for your time today, speaking with us on such a really interesting topic. I think we've done a lot, so thank you. And audience, thank you so much for your great questions. They were fantastic, and I'm sorry I didn't get to all of them, but I tried as many as I could. And please tune in again tomorrow. We've got 2 more days of these sessions. Tomorrow we have Martin Berg will be moderating a panel on large-scale investments in nature, so not one to miss. So thanks again, panelists, and thank you all for tuning in. Bye.